there's something I want to do based on last week. Last week was the best week, I think, in the history of AMTG, over 14 years. Thanks to Christian and what he does in the live trading rooms and the trades he put on, specifically Friday, where the market opened up big. We had a lot of calls, but what makes it so impressive is we also had puts that worked out too. So it's like the dream trading day where, you know, you come in, all the things you thought would go up are up, and all the things you thought would go down were down. Now, whenever we have losses, we always do postmortems. We analyze what we did wrong, what we could have done differently, you know, anything we could have improved upon. It's also good to do that when you have wins. You want to reinforce positive behavior. Be like, what did I just do? Although we know what we just did. So what I wanted Christian to do to start today was go over the setups he was looking for in terms of the market and then the trades he put on, kind of what made him put on those trades. Let's get a look into his thinking because it's definitely a teachable moment, and then we'll show you what happened with those trades. Because I've been getting some emails that were crazy. Okay, does that sound good to all of you? If it's good, just yes. Great, thank you so much. Thank you for being so supportive. I appreciate it. Christian, first of all, congrats. Last week was awesome. I just spent the weekend reading positive email after positive email, and there's nothing we enjoy more than helping people succeed and prosper in the market. So, you know, tell us like the making of that day. What led us to Friday from the market perspective and then the trade. Sound good?
Yes. It was, I was just kind of going through it here as you were talking, trying to remember, because it tends to revolve around, I think, a lot around Thursday profit specifically. Wednesday profit had a good week as well. TPM made money, but the big thing, which I think we're all talking about, is Thursday profit and how everything just kind of went our way. But I think the thing about it is that so many things that we do in the rooms were on display that day. So I guess the easiest thing to do, I guess, first is to go back to next week or last week and where we were. And let's see, let's go right around. All right, so we had already kind of pushed through this area on the S&P. A lot of you remember this from last week or the week before. Our view was the market was going to go higher. We thought that opened the door for the Dow to make it to 26,000 to 26.3, the S&P to make it to 3,100, right? 3,150. That was the zone. So a lot of you know this going in. I think that's mostly a recap, right? So one thing about the rooms is, obviously, as I always say in the rooms, is we rise and fall with the market. So typically, if we're in calls and the market goes higher, we're in good shape. If it goes lower, we're not, which is what made last week kind of such a fun day, because who hasn't on this call had those days where you were just in the wrong calls when the market was up, or you were in puts and those were the only ones that weren't down on the day the market was down, and this was a day where everything just kind of worked out. So if you flash back to last week, that would have put us right around this area here. Here's your Friday, here's today, here's the Thursday, and the path of least resistance is up. Now, for those of you who don't know, sometimes we put on trades the day before a profit room via alerts. So in other words, on a Wednesday afternoon, late in the day, we might go ahead and send out an alert for Thursday profit, because what we want to do is, you see here what happened on Friday where the market jumps like this. You can see a couple days earlier, the jumps, we get a lot of those lately, right? These jumps higher, these drops lower. So sometimes if we like what we see, we will put on trades ahead of time so that we're already in if the market goes our way, okay? That day, I'm just gonna try to get all of these for everyone together in the order so it makes sense, because there's a little bit of a story here. So Wednesday, we think to ourselves as Thursday profit AM people that, hey, it looks like we're probably going higher, okay? So what we did was first picked out some of our favorites. Lulu, okay, Lulu's hanging out here. We think to ourselves, you would think it can't go any higher, but hey, it does it every day. So when we were sitting around here, we decided to go ahead and buy the 330 calls. This was Wednesday. All right, everything looking great. We think market higher. We buy the out of the money 330 calls. Thinking we're going to jump higher Thursday and or Friday, right? We do the same thing with Goldman Sachs. Okay, we think to ourselves, we're here pushing above 210. Looks like we're going to close above. So we buy the 215 calls. Okay, this is all in an alert, by the way. So everybody gets this ahead of time on Wednesday. And then the third call that we bought in that alert, all right, ZM, looking obviously like everything else. Okay, here's the day on fire. We're thinking to ourselves, hey, maybe it's got one more day of juice. So we went way out of this. We bought the 240 calls. Okay, so just to recap, late Wednesday afternoon, we like the way the market's looking. We want to be in some calls. Normally we might not buy 3, but we really like the market, right? So we bought the Lulu 330 calls, the Goldman Sachs 215s, and the ZM 240s. Something that we've got accustomed to is buying a protective put when we're biased to the upside, or protective call, right, if we're bearish to the downside. In other words, everything looks great, but we concede that in trading we're going to be wrong sometimes, so why not have something dangling out there just in case? So what we bought was the W puts. Now remember, we were up here, okay? Here's today, Friday, Thursday, Wednesday. We're thinking, well, stock doesn't look great on a pretty good day, so we bought the 170 puts down here. The idea that, hey, if we're wrong, let's be in a stock that looked kind of weak, all right? So there you go. So there's the alert that goes out for our live Thursday call, but we got in these trades in advance. And again, we do this for Friday sometimes, Wednesday sometimes, specifically if we like what we see. So we had these 3 calls, we had those puts. We come into Thursday morning, all right? So here we are, essentially a little flat, not doing a whole lot, dropping a little bit, which was fine. We actually liked that in our AM, but we were already in all the calls that we wanted to be in, so we didn't add any calls. Normally, we might add some calls. Ooh, we're pulling back before hopefully popping higher, and that was our forecast. As you can see on Thursday, not a whole lot happened. Okay, we pulled down, held 3,100, but didn't really go anywhere. Okay, so what are we seeing Thursday morning, right? Imagine you're there with us live and we're watching our stocks. Let's go through them again. 1, we were in the Lulu calls. Here's Thursday. Didn't go anywhere, right? Uh-oh. Lulu had went up no matter what every day. This is important. Lulu wasn't going anywhere. As a matter of fact, it was down. On a day that the market was down a little bit, but right, remember, Lulu didn't care. And so now we're saying, did we just get into Lulu the day that the rally stops? Did we literally just kill the rally, right? So this is going through our mind Thursday morning, okay? ZM, here's Thursday morning. Whoa, okay? Not only are we not going up, but we're dropping in the face of a market that is not. Uh-oh, ZM just completely reversed the day before, right? So we're a little concerned about Lulu. We are a lot concerned about ZM. Okay, remember, we had 3 calls and 1 put. So immediately what we did that day, when we're still up around the 215 area, was we bought the 200 puts, okay, on ZM. In other words, we ended up being in a strangle here. Now we did this, we already had our W puts, but we were a little bit concerned, right? Markets had made it to our area, so we have to concede, could go down. ZM not going up when the market is stabilized and starting to push back up off 3,100 S&P, and we only have 1 put. That 1 put may not be able to pay for all $5 we put on the table the day before, right? We put $4 into our calls. By that I mean $1.15, $1.85, right? And $1. Add it all up, $4 in our 3 calls, $1 on those puts. We got $5 on the table. Is W all by itself going to be able to pay for all those? Well, I mean, at one point, look where W was. W was rallying that Thursday morning. So it looks like, if you can imagine, everything's going wrong. And this is what has become the beauty of the profit rooms. Okay, the analogy I give everyone is we are playing chess. Okay, whether it be Wednesday profit, Thursday, whatever, we're playing chess. Okay, our pieces are on the board. We make our move, in this case, Wednesday afternoon. Now the market's making its move, and we have to react to that. And we have time to do it. Okay, so we see 2 out of our 3 calls are not going up. 1 is dropping. The 1 put that we had, protecting ourselves, is actually rallying. The only good thing we got going on was Goldman Sachs, right? Goldman Sachs was pushing up 212, 213, 214 right here all by itself. So we're like, man, we could be in trouble here. All right. So we add those ZM puts, and now we have $5.50 on the table. You don't necessarily need to remember all the individual numbers, but the overall number, because that's about chess. Okay. We now need to know that I need to compensate for $5.50. Somewhere I got to make it my chess pieces here. All right. So we added those ZM puts Thursday right here. Okay. So here we are coming out of Thursday's call. Let's recap. Thursday's AM call. We still have all 3 sets of our calls. The ZM 240s that look terrible now. Good luck with those, right? The Lulu 330s, right? Those are looking pretty rough because now we got to get all the way up here and clear it. It could happen, but we just lost a half day's worth of price action. We needed that. Goldman Sachs is looking okay, but man, we got the 215s. I got to make up $5.50 somewhere. If this market rallies, it looks like I'm not going to get any help in ZM. I'm not going to get any help in Lulu. Goldman's going to have to carry the weight on its own. I've got 2 sets of puts, so I'm okay down there. But one of them, W's rallying in my face. Thanks a lot, right? So this is what we're staring at coming out of that call. In the afternoon, around 11:30 noon, I'm looking at it, right? Market's making its moves, right? It's moving its rook, it's moving its knight, couple pawns. It took some of my pawns, all right? So we're playing this game, and now I have to decide, what do I want to do? Okay, it's not about what's happening today. It's about what's happening in our journey from Wednesday PM to Friday PM, and how do I position myself, okay, in a way that we can still profit here, because it doesn't look good, right? And this happens to us all the time. It doesn't look good, all right? But let's fight the good fight here. So here we go. Right around noon, I send out an alert because we're already off the AM call, but I do keep the room open all day so that people can listen in. They can hear me sending out an alert, get a couple minute jump, right? So here's what I decided to do. ZM, those 240 calls, here's what I'm thinking. If we rally, we're probably in trouble. Remember, I got to make up $5.50. And Goldman Sachs, my target was 220. Look where it's been hanging out the past 2 days, right? That's where that analysis comes in handy. I own the 215s. If I get to 220, that's $5, but I got to make up $5.50. So I'm still in trouble, right? Maybe I can get a couple bucks from my puts. I don't know, maybe Lulu can rally, but right now I like to be, conservative and under promise, over deliver type thing. So I'm like, wow, if we rally, I can't get to that $5.50, let alone make money. ZM and those 240s trading for 15-20 cents, those are going to expire worthless. That's what we do in the profit rooms. Those are gone. Lulu looks like it's gone, right? Now this was a tough call because Lulu could easily pop and we're there, but I'm thinking, man, Lulu couldn't go up when the market tried to rally a little bit on Thursday. I think we're going to lose this 330 as well, and that was trading for around 60 cents. So here's what I did. I refer to it as rolling, okay? Similar idea like you might do with an option, but what we did was we rolled our Lulu and ZM calls over to Goldman Sachs to pay to bring our 215 calls down to 212.50. Okay, so let me repeat that. I'm looking at Lulu and ZM in a scenario where we rally. It looks like they're not going to help me. And look at how neither one of them would have. So we ended up making the right call. It doesn't always work out for us, but when it does, whoo, it feels good, right? So my thought was we are not getting to 330 or higher, and ZM's not. Our bread and butters, those go to zero. Well, let's not let that 80 cents go to zero. Let's take it. In other words, sell those, bring it over to this, where it looks like we got a fighting chance that Goldman Sachs, in the scenario where we rally, probably gets to 220. Financials looking great. Look where we closed that day. It rallied all by itself. But let's bring that 550, that 215 call down to 212.50. Okay. Now the roll by itself to bring this down was like 90 cents, but we financed most of that with the 80 cents from Zoom and Lulu. Now, why not just keep Zoom and Lulu and go ahead and pay the extra 90 cents? Because, well, that just raises my number to 640 now. Okay. And if I think Zoom and Lulu calls are a lost cause at that point, why bother doing that? Let's take that 80 cents, pay all but like a dime of this roll and bring that down. So for a dime, I bought $2.50 of potential intrinsic if we popped. Okay. So in other words, now if we get to 220, my Goldman Sachs calls aren't worth at least $5, they're worth at least $7.50. And I gave us that fighting chance, okay, if we rally. So now I can get that $5.50 plus $2. Okay, so that was move number one. We closed out Zoom and Lulu, use that money to pay to bring our strike down. That's what I call, we are rolling Zoom and Lulu over to Goldman Sachs to roll Goldman Sachs' 215 calls down to 215, right? Market made its moves, now we're making ours. Okay, knowing that at the end of this chess match we could lose, all right, but we got to make you're making the highest probability decisions you can, all right? So at noon on Thursday, we own the Goldman Sachs 212.50 calls now, the Zoom 200 puts, and the W 170 puts, right? The Wayfair, which again on Thursday, not looking bad, right? It rallied, but then by the end of the day, hey, our puts aren't looking too shabby. All right. So what do we do in the profit rooms? Wednesday, Thursday, Friday, we come back at 3 o'clock. Let's check that chessboard again. Let's see what the market did in the middle of the day and see if we need to adjust our pieces. All right. So what was the market looking like? Well, it was looking like it was going to hold its ground. The Russell looks like it was possibly wanting to pop above 1450, a meaningful mark. If that happens, everything's pointing towards higher on Friday. All right. So now that I have more information, I'm feeling pretty good about those Goldman Sachs calls, right? But that's all I have is the Goldman Sachs calls. And yes, if we run to 220, we make $2,000 or 2 points, right? That's awesome. Okay, that's cool. That's like a base hit or a double. But in the profit rooms, we don't swing for base hits and doubles. We swing for the fences, right? Or as I like to say, when you look at football, some people play for good defense. We play to light up the scoreboard. That's how we win. We go downfield, all right? So I'm looking at the fact that we're a little light on the call side. So what did we do Thursday at PM? First off, TTD sure was looking good, right? So we thought to ourselves, let's buy those 360 puts, okay? I'm sorry, calls. If the market rallies, we're down a little bit on Thursday, but TTD tends to do well when the market does well. Okay, we don't know about the jobs report and the market's going to pop. We just say to ourselves, I don't know, the TTD pops, okay, for whatever it's going to cost us, 50, 60 cents. Let's buy these 360 calls. I think it was 50 cents. Let's buy these calls. Okay, you can see what happened on Friday, by the way. Okay, so we bought the 360 calls. We also said, you know what? Just for you know what's and giggles, Octo looks like garbage. I got a great idea. We're down here. This thing's dropping $5 to $10 a day, right? By itself. Let's go ahead and buy the 180 puts. See what happens. Okay. So we added Octa puts. So now we have 3 sets of puts. W, Zoom, Octa. We added our TTD calls as well. All right. Now, one last alert went out. Our W puts on Thursday. Okay, this might seems like a lot, I know, but profit room people, they don't have to worry about. They just let me do it, and they just do. All right, so it might sound like a lot, but that's what I'm saying. The journey is what made this all so well worth it. Okay, again, those of you that are baseball fans, think about manufacturing runs. Okay, think about all 9 innings, right, and how you have to manage the game. That's what we're doing here. I'm looking at our W puts that we paid $1 for on Wednesday afternoon. On Thursday afternoon, they're trading for $1.70. All right, so everybody forget about everything right there. Just focus on this, okay? Because this could get a little confusing, okay? Could. if I'm calculating here, okay, and if you're not familiar with this, let me give you a kind of like a, I don't know, a way of thinking. Okay, so here's Wayfair. Let's say that, just looking at it right now, I wanted to buy the 160 puts. Whoops, we got the wrong month, wrong week. I would say those look expensive. So let's say I bought the 160 puts, okay? Because I think Wayfair might go down. I can somewhat project, I like to say back of the napkin, okay? I don't have time to do all this other cute stuff everybody else does. I got this stuff to do, okay? So just back of the napkin. If Wayfair falls and falls quickly, very quickly, what could my 160 puts be trading at in the best case, I'm sorry, $2, in the best case of scenarios? Well, what are our 172 50s trading at right now? $6. So if we fell very quickly, like soon, I can go from trading around $2 to $6 just with time inflation, right? Okay. So Thursday afternoon, I'm looking at Wayfair, right? It's dropping a little bit. I'm like, I don't know, 70. We're currently trading at 170. When I did that little back of the napkin, I said to myself, we might be able to get to $3 if this thing drops to 170 and holds. That was my target price. By the way, look where Wayfair is holding. And for those of you new to this, this is why I say everybody that puts all 99% of their efforts into understanding options, right? And you hear me joke about, I don't care about the Greeks, I don't care about the implied, I don't care about all that stuff because I put 99% of my efforts in this analysis that, as you can see, served us well. Okay, two sides of the same coin. Okay, but notice how these things, when they work out really well for us. The point is, I'm staring at $1.70, and if it drops, I'm thinking, well, at best we can get $3. Not bad, right? But think about it. I'm risking $1.70 to make $1.30 in that scenario. Or I glance over to Shop. Okay, here's Shop. Okay, well, here's the day we get in, right? Okay, this is the actual, well, here's the Thursday, I'm sorry. So we did add these Thursday afternoon. I'm seeing Shop do this and then do this in a market that is not dropping, fall below 750, which it had been trying to hold. And I thought, you know what? For whatever reason, Shop looks terrible. And I could buy, and I think we were trading around 733 at the time. I'm thinking, you know what? I don't know. If Shop falls to 700, right? Wayfair's dropping, Shop's dropping, all these work-at-home guys seem to be dropping. If Wayfair's dropping, and at that time Zoom was down, and Shop is down, well, it sounds like if I get one of those right, I'm going to get the other right, right? So I look at the Shop 700 puts that were trading for $2.30. All right. And I look at the 735 puts where we were currently trading, and they were trading for anywhere from this $11, $12 area. So let's think about this for a second. I could stay holding on to my Wayfair puts, and they might go from 170 to $3, or I could roll those puts over to the Shop 700 puts, and it would only cost me 60 cents. I'm only paying an extra 60 cents to get those 700 puts. Okay? Now those puts would have cost me $2.30. Forget about the discount, $2.30. Notice the difference. If we fell quickly, that $2.30 could turn into 10, 11, or 12 with a similar drop. I'm risking $2.30 to make maybe $8. So I'm like, wow, would I rather risk $1.70 to make $1.30 in Wayfair? Or would I rather risk $2.30 to make $8? And oh, it gets better, by the way. If Wayfair is paying for that, then I'm actually only risking 60 cents over here, extra money, okay? If they both go to zero, I lost $1.70 versus $2.30. What's the difference? But if they both go my way, the risk reward is better. So hopefully everybody can see at the end of the day, Thursday, we rolled our W puts over to Shopify. Paid 60 cents, right? And that's where we ended the day Thursday. So let's recap it again. We own the Goldman Sachs 212.50 calls going into Friday. We own the TTD 360 calls going into Friday. We own 3 sets of puts, okay? We own the shops that we just rolled into, the 700s. Here's Friday, by the way. We own Okta just because it looked like a dumpster fire, right? It just looked bad. So let's own those 180s. And we still had those ZMs that only cost us 50 cents. All right, so hope everybody's with me. Friday morning, we send out an alert. Here are the sell limits we want to set going into Friday morning. Now remember, we can see in the pre-market, market's gonna open up big. So we're thinking, well, all 3 of our puts get wiped out. That's gonna be fun, okay? But at this point, we have about $8 to make up. $7.50 to $8. Remember, people getting in, paying an extra dime, paying a quarter or less, 50 cents more. But for the service, it was around $7.50. I wanted to get to $8, so at least we got paid $500 for all this hassle. Okay? So we sent out an alert, and it didn't look all that good. It's like, well, market's gonna pop. Goldman Sachs is probably gonna fill. Let's go ahead and set it. We had a $10 sell limit, but I said, if we can get, we'll set an $8 stop just in case, right? And it got hit, okay? Hopefully TTD pops, right? And it really didn't start the day. Look where we started the day. Look where ZM started the day on Friday, right? We opened that day at 337. This is, by the way, why we let our options expire worthless, okay? I guarantee you somebody did it, by the way. Somebody always does it. Sold this for a nickel or a dime, okay? But we set a sell limit on this at $2, okay? Didn't actually get filled till well after the pop of the rally, but it got filled for $2 later in the day, right? Something that only cost us like 50 cents or something, or 30 cents, whatever it was, okay? Which is what we shoot for, right? Hundreds, if not thousands. Our Goldman Sachs gave us 8, so there's 10 points, which is cool, right? We would have made around $2,500. However, what was amazing about Friday morning was we were in the 3 best puts we could have asked for. Our sell limit on Zoom, I think we had, and I could have these numbers a little off. I think it was $3 for Zoom, $2 for Okta. Those could have been reversed 2 and 3. Okay, but I want to say it was $3. Look what Zoom did. Fell right out of the gate. So I'm trying to conduct Friday profit, and then my chat board starts exploding with Goldman Sachs is filled, Goldman Sachs is filled. Hey, Zoom just got filled, Shop just got filled. I'm like, wait a minute, Zoom and Shop got filled? We hit $3, okay? Okta fell, we hit $2, and I said it might be reversed 2 and 3. And then the big one, Shop fell. Shop fell for $5. All these alerts, all these sell limits were set out before the market opened, so people could just set them and go about their day, right? So I'm focusing on, before we knew what was going on, we closed the 8 from Goldman Sachs. Okay, I say 8 points. So right, so we closed it for $8, 8 points. So we got 8 points back. Remember, we needed about 750. And then I knew right out of the gate, all 3 of our puts got filled for like 2, 3, and 5, so another 10. Right? So we knew that, okay, we needed to make up 750 or 8. We just closed out 10 in the first 2 minutes of the day. The first 2 minutes of the day. And so we had $10 or 10 contracts, 10 grand. And then TTD decides to try its way up to 360. We didn't even need to get there. All we needed to get to was around 356, and our $2 sell limit got filled. Okay, I thought we might get to 360, might run into some resistance, and we did. So I set a sell limit according. All these sell limits are based on if we get here, how much, and that's that back of the napkin stuff. I thought, well, if we get to 360, I should be able to get $2 today. If Shop, looking at the numbers Friday morning, if we get close to 700, back of the napkin, I should be able to get 5. Some members got 6 and 7 because it dropped further than I anticipated, more quickly than I anticipated. Okta should fall to 180. What should it be trading at? Zoom should come to 200 and try to hold it. You can see that it obviously did, just like today. What should it be trading at? Goldman Sachs, if it gets to 220, it's probably going to wrestle there, and it did. All right? So that was the journey from start Wednesday. That's why the profit rooms are so much more than they used to be. It's not just, hey, we buy calls, we buy puts and see what happens. Okay, we've added so many things to our arsenal. One, this rolling idea, bringing strikes down or bringing them up to give our options better chances to profit when the opportunity presents itself. We've added home lottery tickets, which is what the Zoom 360 calls were. I'm sorry, TTD 360 calls. It was a lottery ticket. It's like 30 cents or whatever. If it hits, it hits. Just like the Zoom 200 puts, 50 cents. If it hits, it hits. We made 3, 4, 500% on these. We've added the lottery tickets. We've added the rolling that we do. The rolling from one trade over to another. If this one doesn't work and it looks like odds drastically favor expiring worthless, let's move it over here. Okay. We've added that 3 o'clock hour where we can adjust those chess pieces and everything. And Friday ended up being a morning where it looks like, hey, we might get to break even. If TTD pops, maybe we can make a couple grand. But when everything works out, and this is why when someone gets upset about, some bad news that hurts us, but then when good news comes out that helps us, and they say, hey, we got lucky. I say, no, we didn't get lucky. It's a market. Somewhere down the road, we're going to get whacked. It's not because we got unlucky or lucky. These things happen in a market, right? Sometimes I get hit by a pitch, and sometimes I don't get hit by a pitch, right? It's just a part of the game, okay? Same thing on those days where nothing goes our way. We've been in the market on days where none of our calls worked out in an up market and all of our puts went up in that up market, Just everything went horribly wrong for us, okay? So it's not about luck, or if you do the right things time and time again, or if you simply remain disciplined, okay? The yin and the yang and everything. And Friday ended up for Thursday profit, ended up being one of those days where just everything worked. And within 5 minutes, it's just boom, bam, pow. So I tried to cover that. I know there's a lot going on. So those of you that aren't a part of the profit rooms, I tried to explain that in a manner where everybody could follow, and sequentially in the order that it went. So hopefully everybody was able to follow. But anyway, that was our day. 12 grand when it was all said and done.
Thanks, Christian. So that was a great 12 grand day. Tiffany said I would love to have a lottery ticket service, made 10 times the money on the Boeing lottery ticket from Wednesday profit. That's awesome. And for any members that are not sure in terms of which service, and this is the live trading rooms. So just email Stephanie@adamesh.com if you want to just confirm what you have. Scott said the most exciting trading day ever. And yeah, the emails coming in were, things that make us feel good. That's what we're in it for, is for you all to have the best experience possible. And it's just fun when it all comes together and works out better than you could have hoped. You don't expect to hit them all across the board, so when you do, I thought it was a good teachable moment, because you guys know me, I like to beat myself up on the downside if we get anything wrong. So certainly like to take the time when it's that good to go over it. So thanks for that. Most exciting trading there. What a great journey. It's just live trading, so it's a different experience to be able to be there live. It's literally just a different experience. Okay.
The great thing about the rooms, for those who aren't familiar with them, is that, and it's hard to adjust to this initially, but when trades go against us, they are 100% losses. Okay, and I'm not going to take up everybody's time after 45 minutes to explain that why, but trust me, it makes more sense for us to do that. Well, you saw with Zoom. Imagine how many members probably sold for the nickel or the dime, TTD, when it looked hopeless, but then we end up selling it for 2 or more later. But the great thing about it is when you know that you're zero, when your losses are capped, right? They can't get worse than that. How many of you have struggled with that in the past? Should I get out now? 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 We never have to answer that question. All we have to do is say, look, we already know how much our opponent is going to score, okay? 100% loss. We have to now outscore them to get something north of 100% gain, right? So it allows us to make these decisions where, like Adam said, we can have bad weeks. Doesn't always work out for us, okay? We can even have bad stretches, but we know that when the stars align for us, or when a trade just goes well, like 2 Wednesdays ago where we walked in and we had bought went long 2 calls Tuesday afternoon. Wednesday morning, within 10 minutes, we sold them both for north of 100% gains, right? That it makes our job easier because we're never wondering about, well, those percentage of losses versus gains or anything like that. We already know what our losses are. Now, what we have to do is say, what path best gets me? Anybody ever read those Choose Your Own Adventure books, right? Which path, now that I've reached the end of this chapter, which page do I want to turn to now that gives me the best chance to get to the end? And that allows us to jockey for positions. And so it really, when it works out, it's just, yeah, it's good stuff, especially last week.
Awesome. All right. Anybody that bought the Boeing Whisper trade for 30 cents should have been ecstatic, as that money also made some nice profits on Mumble trading McDonald's and Berkshire. I love this approach, guys. The other services do not explore this potential. Thanks again. You know, Bronco, that's really true, and that's by design. You know, we ease our way up. We start with the most high probability trades, so that you can have confidence in us that we know what we're doing, such as credit spreads or diagonals or even the Phoenix, which just wins, but they're conservative. Once we've established a relationship with you all, and you say, okay, these guys are legit, they know what they're doing, that's when we're like, okay, now that you know what we're doing, and we know that you know what you're doing because you want to make sure you're good to go to the next level, let's see how far we could rev this engine. And that's what Christian's live trading rooms are. That's the rev of the engine. Okay, just gotta sell something real quick. Okay. Based on one contract per trade, what was your highest exposure throughout the week? That one bit too hard for me to give up. Christian, so do you know if you added all the debits together, what your highest exposure would have been for one contract?
I assume they mean had on the table at any time. When we went into Friday, we had essentially almost 8 points that needed to be made up. What I mean by that, when I use that terminology, is just dollars, how much we had put into things. So one contract would have been $800. However, I don't know that you had that on the table the whole time because of that jockeying of position. The initial open on Wednesday was $5, 5 points. In other words, one contract would have been $500. But by the time we got to, so hopefully you can see there's 2 different answers to that question. We didn't have $8 in those because we had closed out Zoom, we had closed out Lulu, right, and moved that money over, so forth and so on. So depending on how you look at it, 5 to 8, let's just use the high number, 8, you would have had $800 on the table. You would have made $1,200 above and beyond.
Awesome, thanks. Tiffany said I made money on all the Mumble trades. Marjorie said, congrats, Christian. Sounds like you worked it for amazing periods. Great job. Keep it up. Bronco said, this is so reassuring because I can execute with confidence. Vince said it was around $800. Amos said 10 contracts is $8,000. That was the max exposure. Sam said, got it. Thank you. Okay.